How's it going, everyone? Today it is April 4th, Thursday, 2024. Let's get into the video. A lot to talk about today. We're going to first start with our pick from the last video, which was CAT. Really nice compression breakout. I was targeting a nice 1 ATR move on the stock. So if we look at it on an M15 basis, we entered the trade around here and we took profits somewhere around here. So really nice move overall. So CAT was a nice win. I'm going to talk about the two trades that I'm going to give you guys today. But first, let's talk about our market bias. So you can see big red engulfing candle on the D1 today. Pretty interesting day. So coming to this day, if you look at the market, our market bias was 2 bullish. We're still looking pretty good, but the momentum is starting to wane. And I talked about some of the economic stuff happening in the video yesterday. But overall, you can see that the market is compressing a little bit, breaking out, compressing a little bit, breaking out. So we're kind of waiting for our opportunity to strike. So the first thing that we want to talk about today is just what changes with the D1 context of this candle. So our long-term bias is still bullish, right? Because we have this very big rally. So we had this is the first strong leg of the rally, right? So this is the initial move that puts it on the radar. Then we're trading pretty much all of this chunk over here. There's the key bars from the let me make this a little bit bigger. Key bars from the FOMC. So we're trading this huge chunk of the rally over here, and then when it starts to weaken around here, right? So this month that it starts to weaken a little bit, this is our warning sign that we want to just not be in a whole bunch of positions. And we'll talk about the open positions that we have right now. So our long-term market bias going into it was 2, and then yesterday I thought my short-term bias was mildly bullish over here. We got to close above the prior day high. We were holding the support. We probed into the gap and we held that a little bit, so that was looking pretty good. Now let's go into how this day changes everything. So now that we have this bearish engulf, this is the first sign of some decent selling pressure that we've not seen in a very long time, pretty much a year. This is what it reminds me of, this day right here. So this tells us that there's a lot of selling pressure at this level, and it's, I'm not exactly sure why. I was kind of reading in the chat. I'm still getting better at this fundamental stuff, where some people are saying it was oil, and there was some Fed speak, and then we had a lot of people buying into this initial move on the Thursday report. So there was some fluff, a lot of buyers over here, and they may have gotten squeezed out a little bit. So we are still very bullish, but just not as bullish. So personally for me, I'm shifting my long-term bias from a 2 bullish to a 1 bullish, because unless this candle gets absorbed very quickly, to me, buyers wouldn't have allowed this move to have come in so heavy. And you can see this huge acceleration of the move as the day progressed, where we broke, and we'll start over here. We had a pretty big gap up. We had a pretty wimpy retracement to test the gap. And then there was a nice day trading opportunity for here to test the high of the day. If we broke through the high of the day, we would have had a nice range bound day. So my current market bias was actually, it was a bit of like maybe a -1 bearish over here, and then I kind of shifted to a 2 bullish after I saw this clean price action. We had a nice opportunity, and I took some nice wins and some day trade longs. But it's really interesting because I have been writing out all of the reasons that would shift me from my current position from a 3 bullish all the way to a -3 bearish. So I say, okay, what are all the things that I need to see in order for that to happen? And what I wrote is, for me to get a 3 bearish intraday, I'd have to see long red candles into the gap on heavy volume. And that's pretty much exactly what we got. The other interesting thing is, when you have all of this momentum going into the gap fill, it's very likely that there's going to be continuation, because this is a very strong move, and the gap buyers, I mean, they paused it for literally 1 bar. Sellers took the advantage and then they pounced to get out of the positions. And this move kind of accelerates because as it gets traction, more and more buyers are getting squeezed out at this level, and they're panicking out of their shorts, or sorry, out of their longs. People who bought at the open over here are going to try to defend that level, and then they got squeezed out over here. People who bought at this level got squeezed out over here. And then you can see some buying at each of these levels on this section. And then the move starts to wane a little bit. There's still some buying in here, but this is some very, very strong selling. So I think, to me, this is the type of intraday move that can actually start to contextualize the D1 candle. Oftentimes, and most times, the D1 candle or the D1 chart is what contextualizes what we expect to happen on the intraday action. However, this intraday action was something where we were going to zoom out and see, okay, now how does this change the story of the daily chart? And my first thought was that it reminds me of this day over here. So the market, we didn't have as much of a bullish market as we did recently. So you can see this bullish move lasted from maybe the beginning of June all the way to the end of July. So about 2 months. It was a pretty nice bullish move. And then we got this bearish engulfing candle. So this isn't something that'll immediately panic you out of the shorts, but as Pete calls it, it's the first chink in the armor. So we get this chink in the armor, and now the market stages some support. It tries to rally back up, and then we get some double top. And here's where we break through. Right? And this is a technical breakdown in the market. We're a little bit more market neutral. We get this retracement here. So here's our deep retracement. And then we're climbing up higher. And now the bounce is starting to stall. And then here's where we get a little bit more bearish, right? Because we've seen a deeper retracement, had some mixed candles, and then we saw a pretty tall bounce. So this move, right, from this first chink, July 27th, to this second move right here, September 5th, took place over a month. So it took a while for us to shift our market bias, right? It takes a few weeks, maybe even a month or so. So I'm pointing this example out because it's not the same exact scenario as what's happening here, but it does tell us that buyers should be stepping in because there's a lot of buyers here and they want to grab it at an attractive price. So they may chase. They haven't been chasing any of these breakouts over here. They've been taking the chance to profit on these breakouts. So there's not been any follow through. The market has been slowly shifting a little bit sideways. So this may have some continuation. It may not. The interesting twist to this story is that we have the unemployment report tomorrow. So here's the last unemployment report on March 1st. If we look at the other Fridays in the week, let's look at the February Friday. So February 2nd, here's February 2nd, bullish reaction. Okay, let's look at the other one, January 5th. January 5th had a bullish reaction, then it kind of pitter-pattered. But typically, they've not had a bearish reaction. That's been sort of the theme that we've been seeing on these unemployment reports. December 1st, right, here's a nice little bullish reaction. So I'm expecting a bullish reaction on the unemployment side. There's a chance it'll be unfavorable and be bearish, but I'm expecting a bullish reaction here. So our long-term market bias is a 1 bullish. That is the main change for today. I think that's the thing that's important. Our short-term market bias is pretty bearish, I would say. We've broken through the Friday low, There's been heavy volume, big bearish engulfing candle. Okay, so short term, a little bit bearish, but we have to consider the unemployment report tomorrow because that could be a bullish catalyst. So in the short term, I'm a little bit more uncertain. It could have followed through, but this news could also cancel it out. We also could see buyers aggressively scooping at this price. So we need to just be careful and not overload on our positions and also not panic out of our positions, right? We got a couple of swings. We got a couple of bullish put spreads. We entered them at pretty decent times. And then this is something that we just have to take into consideration now as we plan ahead in terms of managing these swings and taking on new trades. All right. So I'm not going to go over the market intraday today because it's obviously closed, but we had it was some nice strength earlier in the day. And let's talk about some picks for today in our portfolio. So we talked about CAT. We took some profits on CAT, so I'm going to remove that from our list. First one we have is Wells Fargo. So Wells Fargo is still in this long compression. It's testing this range out over here, but it's still holding the compression. So if we look at the chart today, let's compare it relative to the market, and you can see all stocks dipped, but this stock reacted somewhat. Initial move, it took some reaction, and then it kind of slowed down. So it was pretty in line with the market, not super weak, not super strong. Our Amazon put credit spread, which expires next week at the 72.50 strike, is still in good shape. We're very much out of the money. We got the bearish engulf, so Amazon had a lot of heavy selling later in the day. But remember, we don't expect the market to completely roll over here. This is our first sign. So we can still stick with the put credit spread, and we are in good shape. Now let's look at Lyft. Lyft is one of the dogs in this area. So it has been steadily selling down as soon as we got this breakout. I mentioned this pattern over here. Now, you could justify taking the loss on Lyft today. I think that's fine. But here's what I see. We're right on our AVWAP-E and some of this horizontal support that got carried down with the market tailwind. So we can still lean on this a little bit. All I'm saying is I'm not expecting to take profits in Lyft. What I'm trying to do is say, hey, I'm not panicking on this candle, and I'm looking to take a much better loss on this position based on my expectations of the market and how this stock moves. We know that there are buyers at the AVWAP-E, and we would expect them to step in provided the market doesn't roll over, which again, we don't think is going to happen. And then we have App. So App was doing really, really well today. You see it found support at the bottom of this channel, came back up, and it was doing fantastic until we saw the market selling later in the day. So you could have taken the scratch on App, and that was my original thinking when it took on this trade, but I like the strength in this stock. It held all the gains, didn't really give back up anything yesterday, right? So this tells me that there are still buyers in the stock, and there's buyers the whole time on the way over here. So some excellent relative strength on App, and I'm willing to keep the stock and ride it out until it hits my profit target, because I assume that if there's any sort of market bounce, any sort of market flatness, the stock can continue to do pretty well. Okay, so 2 picks for today. I call that RTX, and this was one of the trades I took today. It was actually before the market bounce. I took it right here, where it broke through. First, we had the LRSI M15 cross, which took place around here. I liked what I saw, but I didn't like the gap down on this cross. I wanted to get, I wanted to get at least into the gap or see some stronger price action with the M15 cross. So that's why I didn't take it initially. Today, it moved up higher, and it challenged this relative high over here. Pulled back, tested the VWAP, and here's the major clue of this stock, was that as the market was completely selling off, this stock was actually able to rally. So it's actually the most insane stock that I saw today. So took it over here. took some heat, and now it's actually in profit. The trade is actually in profit, even though we got the market completely wrong. So that's certainly the power of relative strength. So RTX with the first pick. Now, if you have a bullish portfolio, right, and you're saying, hey, either I am a little bit, if I want to protect myself from the unemployment report, you could do a couple of things. You could de-risk. You could take a VIX call maybe, or you could take a relative weak stock. So what I did is I have a few more positions on that are taking some heat. So I said, hey, I'm not going to panic on them just yet, but in the event that I am wrong about the market and the unemployment report does end up being a bearish catalyst, I don't want to be worrying about closing my positions. I'm ready to take action. So I chose to take a relative weak short hedge within PanW. So first of all, we got an excellent breakdown, break of a compression, break through this long-term upward sloping trend line, balanced breakout. This is an excellent, very, very valid trend line. We also broke through the 200-day SMA, and we have plenty of room until support, which is coming really, I see it at this level over here. I also see some top support kind of around this level. So we may, that's kind of one temporary level, and we're already kind of above this level. There's not a lot of touches here. And I do kind of feel it's already above that level, so I'm not too worried about that. But we have an excellent, very bearish chart on PanW, and tested this over here, sold off pretty well. At the end of the day, lots of heavy volume coming into this stock. Not as much as the market, but this is an excellent bearish candidate. So this is why I chose to take a relative weak short hedge. If the market is bullish tomorrow, I can still be confident that this position can be in profit. I feel confident. I'm very close to support. I have a very easy exit, and I know exactly where I'm going to get out. If the market is bearish, I would expect some of my relative, one, I expect the move to not take super long, so I can make some money on the way down. And then two, I can exit my swing longs at a favorable time in the market. So that's why I put on PanW. So those are going to be my two picks for today. So RTX, which we called out earlier, but we're going to get the fill on. And then I'm going to do PanW. I took the 419 22.5 puts for, I believe, 1450. And I tried, it's just right around my max entry, my max risk on a trade. So you can definitely go longer out or deeper in the money. It just depends on your max risk for this. IVs aren't crazy expensive. They're about like 0.3. It's just an expensive stock, has some decent movement. So yeah, that is PanW. That is going to be the pick of the day, and RTX. So they're both doing pretty good. We're going to take a check at what happens tomorrow. Should be a pretty interesting day. But yeah, that is it for the video. So I hope you guys found this helpful. Hope you learned something from it. Don't panic on these bearish engulfing candles. We have confidence because of this move over here. This move gives us confidence. Buyers are not going to be throwing in the towel. They're going to look for the opportunity to buy. Even if we get some selling, they're going to look for the opportunity to buy when they can. And we're going to take it from there. Catch you on the next video.